Welcome back to my YouTube channel. And if you are preparing for the ACCA F3 paper that's known as financial accounting, so you are in the right place. Today we are going to solve question from the ACCA study hub together. You guys might be familiar with that. ACCA has launched its own material, that's the ACCA Study Hub. And before it was Copeland and the BPP as the approved content of the ACCA, but now it's no longer approved content. Okay, so you can use BPP and Complan in your preparation phase to practice extra question. That's all. But yes, don't forget to use Study Hub as well in your preparation journey. Okay, so because it's the approved material from the ACCA, so that's why it's very important to consider this thing in your preparation phase as well. So in this video I will break it down every question and explain step by step along with the logic and show you how to approach question. So let's start. So this is for the financial accounting student, and I saw they are struggling to solve the question from the study hub as well, because in the group they used to notify, can you solve this question? They are sending the pics. Yes. So I think from today onwards you will not struggle. Yes. So let's start the first chapter quiz. Okay. Okay. I hope you guys can see my screen, and if not, then you can open this study hub in your own laptop and or watch the video in your mobile phone. All right. Okay. So question number 1 is, there are number of different statement within a set of financial statement. Okay, so you guys know the financial statement comprises of 5 things. That's your statement of financial position, which is previously known as balance sheet, and other is a statement of profit or loss, and it is also known as income statement. Third one is a statement of change in equity. Fourth one is statement of cash flow, and the fifth one is your disclosure or accounting notes, right? So these 5 things makes the financial statement, and the question is, which of the following is least likely to be included within the set of financial statement? So first one is statement of profit and loss. Obviously it is included, as I said. And statement of cash flow, yes, it is also included. Third one is statement of key business ratio. Do you think I mentioned this name in those 5 one? No. So this is the least likely. And the last one is statement of financial position. Yes, I took the name of statement of financial position as well. So basically third one point is, basically large business use this one, but not all. So it's least likely, depending on the situation, it's included, but it's not compulsory. Okay, so that's why option C, we will go with option C, confirm. Then next we have question number 2, and it says how a business operates will determine the legal framework it faces and the source of fund it can access. Exactly. So if it's limited liability, they have multiple source of fund option. But if it is the sole trader, they have limited option, right? And similarly, for the company, there is different rules and regulation, like they need to audit their financial statement, they need to publish the financial statement, but same things not happen with the sole trader. So there is there is difference in between two, depending on how business operate, what kind of business operates. So question is, which of the following statement is false? Okay, so business may operate as a limited company rather than the sole trader for tax reason. Yes, exactly. So you might have seen that company is taxed under 19 to 25%, but if we talk about the individual, they are taxed at the different rate depending on the band they are falling on, right? So obviously, if I am sole trader, in that case my profit will be taxed as the under the my will be taxed in my personal tax return. But if it is a company, limited liability company, in that case it will be taxed either 19 or 25%, which is less as compared to the personal tax return rate, right? So income tax rate. So that's why it's true, not false. So that's why a business may operate as a limited company rather than sole trader for tax reasons. So they want to save the tax, so that's why they will incorporate their business into the limited liability company so that their tax will be saved. So option first is right. So we are left with three. Now B partnership can only be formed if a partnership agreement is drawn up. So basically what this statement is saying, to form a partnership, the partnership agreement is drawn up, but it's not compulsory, right? If it is LLP, limited liability partnership, in that case, there is a, there might need a agreement, and that's all things. But if it is a simple partnership, it will be treated like a sole trader, and partnership can even exist without a written agreement. So just working together and sharing profit, it's enough to create a partnership. So we just needed two people to form a partnership, and it's not compulsory that agreement is required. But yes, if it is LLP, in that case it required, but in simple partnership it won't. So that's why statement second is false. Third one, a limited company, not a shareholder, has a legal ownership of its own assets. Yes, basically the company, limited company, is treated as a separate legal entity. So it's on the property, any machine, any liability, or any money in its own name. That means in the name of the company, not in the name of the shareholder. Yeah. So that's why it's also true. And last is sole trader often use bank overdraft as a significant source of finance. Yes, as I said, sole trader have a very limited option as compared to the company one. So that's why they have limited option for the finance. So sole trader don't have a big funding option. They often use bank overdraft or a personal loan for their business needs. So that's why it's also true, and second one is correct. Okay, so we will go with B. Naima is a sole trader who runs a grocery business, and which of the following is most likely to be interested in the Naima financial statement? Okay, all right. So, as I said, for the company and the sole trader, there is various difference regarding the rules and the regulation. So, first option is regarding the auditor. So, if it is company, in that case, it's very compulsory to audit their financial statement, especially the large one. But if it's a sole trader, then it don't usually have a auditor unless it is required by any special laws or regulation. So auditor are more common or more needed in the big company, not in the small trader business. Okay, so that's why option A is incorrect. B, Naima customers. So customers just care about the product and the price in which they are buying the product. So they're obviously not interested in the financial statement. Next, we have a finance bank manager, Naima bank manager. So in case Naima, who is a sole trader who wants a bank loan, in that case, obviously bank manager will see her, business financial statement. They need to know if her business is making profit or generating a sufficient cash so that, their liquidity position is very good enough to repay the loan. So obviously they will look for the financial statement and they're more interested. So option C is correct. And for D again, shareholder is in the case of the company. So as it is the sole trader, so there will be no shareholder, and C is the only owner. So next we have, which of the following is not component of the financial statement? So as I said, there are five things or five elements that will compromise together as a financial statement. That's your statement of financial position, also known as balance sheet previously. Statement of profit or loss, which is known as income statement. Statement of change in equity. Statement of cash flow, notes and disclosure. Okay, so let's evaluate the option. The first one is a statement of profit or loss and other comprehensive income. Yes, this will be included as a component element of the financial statement. Next, we have a statement of change in equity. Obviously, it will be the part of the financial statement. Next, we have a cash flow forecast. See, there will be statement of cash flow, but not the forecast, actual one. So that's why option C will not be the part of the financial statement, because it's a forecast. And the last is accounting policy and explanatory notes. Yes, it's mandatory and it's a part of the financial statement. So we have a C. Then last question number 5, which say which of the following user of the financial statement has least need of the published financial information. See, for the company, it's a mandatory, especially for the big ones, it's mandatory to publish their financial statement, and that are used by the various people. So let's evaluate the option potential investor and their advisor. Obviously, if I'm investing, if I have bought any shares of any particular company, so I would be obviously interested in the financial statement. Why? Because to know whether the company has sufficient cash to pay a dividend or pay their liabilities, and whether the company will be continuing the going concern or not, whether there is any issue in the company, right? So obviously they are more shareholder or investor are more likely to more likely to use published financial information. Then next we have director and the management. See, they will also use the financial statement. I won't say no, but I will discuss this point later on. Let me complete the other one first. See, employee and their representatives. Yes, if I'm the employee, if I'm going to, if I'm looking for the job, obviously I will look for the company financial statement to know whether company again have a cash to pay their salary to their employees. How is the employee turnover? Whether the employee is living within the 1 month or less than 1 year, or what kind of facility or what the things company is doing to be sustainable in the long term basis. So what the action or strategy company is taking for a long term perspective. So obviously employee and their representative will be interested in the financial statement. Next, we have customer and the supplier. Yes, customer will also wants to know whether the company will provide those product or the benefit that they are driving in the long term basis, or customer are also interested whether the company is taking any action against the green environment or not. Their customer usually support the green product, right? And regarding supply, yes, they will also need to look into the liquidity position of the company, whether the company is struggling with the cash, or whether its company a company is in the debt or not. Why? Because obviously they will sell the goods on credit to the company. So if a company is not in the position to pay back, then in that case supplier will lose their money, right? So that's why obviously they will check this thing before they provide or finance the credit to the company. But now let's come to the director one. As I said, yes, they will lose the published financial information, but. So as their internal employee, internal management, because obviously we have a study somewhere that the agent and principal relationship between the shareholder and the director, right? So director have more information what they have mentioned in the financial statement. So they have more information as compared to the published one. So obviously they will be least needed of the published financial information. So that's why option B is the correct. And let's go for the B and confirm. Yes, every answer was right. We did it, right? So I hope this video is useful for you guys. Thank you so much for watching, and let's meet in the next video.